If you run your landscaping business as an S-Corp, there's a simple move that can put thousands of dollars back in your pocket every year, and it's completely tax-free. Almost nobody talks about it. It's called an accountable plan. And by the end of this video, you'll know exactly what it is, why it works, and how to set it up. I'm Tasha with West Financial Services, LLC. We work with landscaping business owners, lawn care, irrigation, hardscape, and tree service, helping you to keep more of what you earn. And this one is a gem. So let's start with the problem it solves. When you own an S-Corp, you pay yourself a salary as a W-2 employee of your own company. That part is required. But here's the catch. You probably spend your own money on real business costs all the time. You fill up the truck on a Saturday, you buy work boots, you use your personal phone to run the crew, and you drive to the supply house to price out materials. Those are all legitimate business expenses. But if you pay for them out of your own pocket and never get paid back the right way, you either lose those deductions or you handle them wrong at tax time and create a problem. That's where the accountable plan comes in. It's simply a written agreement between your company and you that says the company will pay you back for business costs. And when it's done right, that money comes to you completely tax-free. Not just a write-off for the company, but tax-free to you. You don't report it as income, you don't pay income tax on it, and you don't pay payroll tax on it. The money moves from the company to you with no tax at all. Now compare that to the other way. If your company just pays you more salary to cover the costs, then that extra salary gets hit with payroll tax on both sides for you and the company, plus income tax on top. You could easily lose 30 to 40 cents on every dollar. The accountable plan wipes that out. So what can you actually get paid back for? Well, the IRS wants three things. First, the cost has to be for business, something that's normal and necessary for the work you do. Fuel for the truck counts, work boots and safety gear counts, your phone cost counts too, at least for the share you use for business. A family vacation, that's a no. Second, you need proof, which means receipts and a mileage log showing the date, the miles, and the reason for the trip. No proof, no deduction. And third, if the company pays you in advance, the IRS wants you to account for what you actually spent about 60 days and return anything left over within about 120 days. Let me show you what this looks like with real numbers. Let's say you run an S-Corp and over the year you spend your own money on business costs. You drive your truck 8,000 miles for work on top of your normal commute. At the 2026 mileage rate of 72.5 cents a mile, that's about $5,800 you can get paid back. You also use your phone 80% for the business, which comes to around $1,440 for the year. Work boots and safety gear run about $600, and you use a dedicated spot in your home for scheduling and paperwork. So that home office is worth of roughly $1,200. Add it all up and you're at about $9,000. And here's the payoff. Your company writes you a check for that $9,000 and deducts it as a business cost. And you receive the full amount tax-free. No income tax, no self-employment tax, nothing. If your combined tax rate is around 25%, you just saved about $2,250. That money stays with you, and the best part is you were going to spend it anyway. All you did was set up the accountable plan and keep good records. Now, one important warning. This only works if you set it up right and keep your paperwork. The IRS, they'll closely look if you're ever audited, and your records are what protects you. So here's what you need. First, a written plan, a short policy that lays out what the plan covers and how to turn in your costs. It doesn't have to be fancy, but it does have to exist on paper. Second, an expense report each time you get paid back with the date, the amount, the reason, and the receipt. And third, a mileage log, because the IRS is picky here. You'll want the date, where you drove from and to, the miles, and the reason for the trip. Now, a simple app or spreadsheet handles it, and it only takes a few minutes a month. Don't skip the paperwork though. Paybacks without proof aren't protected, and they can get treated as taxable wages. So that would mean back taxes plus penalties and interest if you're audited. One more thing worth understanding. This plan is built for S-Corps and C-Corps. If you're still a sole proprietor or an LLC that's taxed like a sole proprietor, it's not going to work, because in the eyes of the law, you and the business are the same person. So you can't pay yourself back tax-free. Now, this is actually one of the biggest reasons the S-Corp setup is so powerful. It creates a legal line between you and your business, and that line is what opens up tax strategies like this one. Here's your action plan. If you're an S-Corp owner, talk to your accountant this month about getting a written plan in place. Then start tracking the business cost you pay for personally, your mileage, phone, home office, and then keep receipts and logs. then turn in an expense report and pay yourself back the right way. And if you're not an S-Corp yet, but your profit is above $30,000 to $40,000 a year, this is worth a conversation because the S-Corp election plus this plan could save you thousands. Now, we've put a free accountable plan template inside our free community. It includes that written plan and an expense report form you can adapt for your own business. Just claim your free membership at the link in the caption, grab the template, and then put this strategy to work. This is Tasha with West Financial Services, LLC. Follow us for more tax strategies and education for individuals and small businesses.